What's up guys? In this video, I will show you guys how to yield farm using vFat. vFat is a position management platform where it makes it easier to manage multiple positions if you're yield farming a lot of different pairs. But before we dive in, let me just show you guys my portfolio. If you're new here, my name is Richard. My channel is mainly about yield farming because I find that yield farming is one of the most profitable things that I've found in crypto. If you guys look at my current open positions, I'm sitting in a 7 Ethereum profit while earning some really nice fees here. My closed position totals to 8.6 Ethereum profit. If you add those two numbers together, it's roughly 16 Ethereum profit. And I also have this wallet set up where my goal is not to make an Ethereum profit, but a US dollar profit while earning some really nice cash flow. And if you look at my combined yield farming wallet, you can see I'm earning a roughly 50% APR on my capital right now, beating impermanent loss pretty consistently here. If you add all of my closed positions, I've had a pretty good track record so far compared to just holding in the market. So hopefully this channel, I would help you guys become a better yield farmer. But again, nothing I say is financial advice. Please do your own research before making any investment decision. And sorry about the voice, I'm slightly under the weather, but hopefully this video would help you guys out a lot. So if we pull up vFat here, if we click on this yield tab, we could go to this pool tab where we could see a bunch of different liquidity pool that we could deposit into. And if I already am in a position, for example, then I also see this as well. So I could deposit my liquidity pool NFT if I want vFat to manage my position. It doesn't support all chains and sometimes it misses some assets, but you guys could go to the setting tab here and look for the chains that you want to yield farm on, as well as the different protocols that you want to yield farm with. And you can search by asset as well. Let's say I want to do only Ethereum to US dollar pairs. Then it pulls up a bunch of different pairs that I could analyze. And this APR number might not be accurate because I've actually did like an analysis on a lot of these pools. And so the actual APR could be very different from what it shows here. But it just gives you a very nice overview of the available pools, as well as give you the ability to deposit very easily. And I could mark as favorite as well if there's a pool that I like. For example, I was using this Ethereum to USDC pool on Arbitrum for quite a while. So I could bookmark it and I could look at all of these details here. For example, the last 7 days worth of fees, what's the current total value locked, and then deposit my position there. So for a crypto to stable pool, typically I want to use the stablecoin as my quote asset because I want to see the Ethereum price in stablecoin terms, right? In US dollar terms. And I could change my range here directly, right? Minus and plus. It's in percentage terms. So if it's minus 50%, then it's taking this current price minus 50%. And this is my bottom range. And if I want the top range to be 50% wide as well, then this is the rough range that I would get. I go over exactly how you guys could set your range in other videos on my channel, so be sure to look at that. But if I want to be a longer term investor, I'm not really going to set a tight range to try to basically squeeze the range and get the maximum APR and kind of chase the range as the price moves. For example, some people set pretty tight ranges here on like their liquidity pools, and then they earn a lot of fees when the price is in range, right? But when there's a big move in the market, which it often happens, like what we're seeing recently, you miss out on a lot of the pump, and then you're basically forced to rebalance. When you rebalance, you lock in a ton of impermanent loss. You're buying a lot of Ethereum at this higher price. When Ethereum's price draws down, you're fully into Ethereum again, and then you lose a bunch of money. And then people basically just keep chasing the range down, rebalancing down, 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 until they reach the bottom here, and then the price rips back up again, then they would lose money, right? So I want to avoid that, and I want to typically have a market bias on where this price is going to go. For example, if I'm comfortable taking profit on my Ethereum, I might be selling some at this current price and get into a more bullish liquidity pool, right? Let's say the bottom range starts at around 2,300. I could do that. And then the upper range could be all the way at $6,000 or even higher at $10,000, for example. if I believe that Ethereum's price is going to trend upward for the next 6 to 12 months, this is a possible range that I could get into. And before you guys actually get into the position, be sure to run the simulations on like how much fees you could generate, what's the impermanent loss, and what's the total profit and loss you can make when the prices go up. So you basically want to make sure you know all of that beforehand. And I go over a lot of that in my YouTube channel. Like for example, how to calculate impermanent loss, how to set ranges and stuff like that. So be sure to learn more about that. But for this video, I just want to demo vFat and how to use it. For example, if I want to set the range near what I was saying, right? Let's adjust this to maybe minus 10%. So 10% is 2,500. It's a little bit tighter than what I would like. So maybe I would drop down to minus 20, roughly $2,300 mark, like what we were looking at right here, right? And the price should be supported by this blue 20-week exponential moving average, which is this blue line here. So I could set my range to be slightly lower than that if I want a bullish range to capture the upside. And the max price, I could play with the numbers a little bit here. And you guys can choose which token you want to send in, right? For example, if I want to deposit Ethereum, I could do that. And I could deposit however amount of Ethereum that I want. Let's do around 0.005 for this example. I'm just going to use a small amount for this example as a demo. And I could basically choose if I want automated rebalancing or automated harvesting and auto compounding. So if I want automated rebalancing, it shows a warning here that I would need at least $2,000 in capital to make it more feasible. So with a very small amount, I wouldn't be using this. And you could choose if you want to compound your rewards or harvest your rewards separately when you rebalance. And then if I take this on, my reward would be harvested separately when you rebalance. And then I could also choose if I want to convert my reward into Ethereum, USDC, or whatever tokens I'm bullish on as well. Or turn it off if you just want to collect whatever Ethereum and USDC you earn. And here I could set the conditions where my pools would rebalance. And this buffer basically means that it would take place once the price reaches that range. So lower buffer margin, let's say I put like 10%. Then when the prices actually reaches like this $2,000 something mark, then my pool would rebalance once it has dropped more than 10% out of range, right? But I could also put like a negative number here, let's say negative 10. If I want to rebalance a little bit earlier before my pool gets out of range. And I could do the same with the upper, right? Like 10% on the upper. If Ethereum breaks out to the top side, I could choose to rebalance, or I could add a buffer of minus 10% here. This is typically what automated rebalancing tools do. They have like a negative buffer here. For example, if Ethereum's price goes to 2,500, it would trigger a rebalance on the lower side. And then my pool would be basically rebalanced down. So it's going to set like the same parameters, minus 20%, and then a increase of roughly 128% from the new price. Let's say it drops to 2520, then it will shift the range there, right? Based on this parameter. And then you could set a cutoff price too. Like let's say you don't want to keep rebalancing downwards. You can set a cutoff point. Let's say I don't want to keep rebalancing down and essentially selling my Ethereum. When Ethereum drops below 2,000, then I could set that as well. So these are all parameters that you could set. But I personally don't use a lot of automated rebalancing because when you guys rebalance, you actually lock in a lot of impermanent loss if you're not doing it properly. And I think it should be more of a deliberate process rather than like an automated thing. And automated pools typically get like shredded and destroyed by impermanent loss. So if I take this off here, I could focus on these other ones. And I will show you guys these like automated vaults, for example, on Beefy or Gamma right now. So this is the exact pair that we were looking at, but it's on SushiSwap on Arbitrum. If we look at Ethereum's price here, you can see roughly 1 year ago in July 23rd, 2024, Ethereum's price was trading at $34.79. Currently, Ethereum is trading at $27.94. So let's see what's the drawdown, right? Let's say what's the total loss if you deposit it like roughly 1 year ago compared to what your Ethereum would be worth right now, assuming you didn't add any position when like the prices is low or sell some when the prices are high, right? So what we can do is 34.79 minus 27.94. So 34.79 minus 27.94. So that's our total unrealized loss if we're still sitting in Ethereum. And then if we divide by our initial investment 1 year ago at 34.79, you're down roughly 20%, right? 19.6%. Not too horrible, especially if you are bullish on Ethereum and you believe the price is going to rise over time. But if we look at this price, it's basically how much your liquidity pool would be worth if you were yield farming with this automated tool. So you can see a huge decline here. If we look at the beginning price, it's around 1 trillion compared to now it's around 526 billion. So really you're down more than 40%, roughly 47%. Compared to being down only 20%. This pool is actually really bad. It's underperforming holding by quite a lot. And you can see a bunch of people are actually still in this pool, like almost $1 million that's deposited in vFat, and their capital is basically going to zero or decreasing over time. Because again, they're chasing the range like what I just talked about earlier, where it's like rebalancing very aggressively with very tight ranges. Sometimes the range becomes a little bit wider, but the range overall is still very tight. So that's how most yield farmers play this game of yield farming, and then they end up with a loss just because they're chasing the range and not using the right strategy. So automated rebalancing is definitely not a good thing, in my opinion, and you should avoid it if possible. And let's look at this Uniswap pool, what we were looking at. If we go back to vFat here, you can see the total value locked is around 58 million, roughly the same as this total value locked here. So it's probably the same pool or very similar pool. And the price of Ethereum loss is roughly the same as what we were computing. This pool started a little bit earlier. So 3559 versus 2794 now. If we calculate the loss, 3559 minus 2794 right now, it's a $765 loss divided by our initial investment at 3559. It would be down 22% roughly, right? If you were to buy Ethereum roughly 1 year ago. But if we look at this price chart again, it's just completely horrible, right? You start here at 972 billion and it has moved all the way down to 668. So if we take the like front three number, right? 972 minus 668, 304 divided by 972. So your loss would have been 31% if you were yield farming rather than just holding your Ethereum or staking your Ethereum. So over a year, you suffered a 31% loss while taking on much more risk for no reason, right? Because again, these automated tools are basically chasing the ranges and it's not profitable at all. So this APY is actually like more harmful than good. People that deposited this like almost $2 million in here are basically just losing their capital over time, especially when the market is really volatile. If the market is really slow moving, like if it's just trending up over time very, very slowly, then I could see this strategy like making sense. But for most pools, even if it's pulling like a ton of APR, right? If we scroll here, the average APR is roughly like 149% over 1 year, but you're still at a huge net loss compared to holding because again, these automated tools are actually squeezing the range and it's actually losing a lot of investor money. So if you guys are starting out, I would encourage a wider range strategy. Take off this automated rebalancing. You don't need it. If anything, you could use this automated reward, which is much better, and you could choose to auto compound the fees. So auto compounding, what it does is it harvests your fees and then make any swaps necessary to basically keep growing your capital inside the pool, right? And auto compounding could make sense if you don't care that much about cash flow. You just want to grow your capital and you don't mind where the price is going as long as you're bullish on both assets. And this probably makes more sense for like crypto to crypto pools if you're trying to accumulate both assets rather than crypto to stable pool where you might not want to compound all the time, right? So if you don't want to auto compound, you could also auto harvest here. You could convert your reward to a specific token. For example, if I'm trying to de-risk aggressively, then I don't want to basically convert to more Ethereum. The goal of this pool, if I have a bullish range, is to slowly sell my Ethereum into USDC while earning some nice fees in the process. So then my goal might be to auto harvest my reward into USDC in this case. And there's auto exit as well if I want to protect my capital, for example, or I want to set a take profit target. Let's say I want to exit when Ethereum's price goes above $6,000. I want to convert whatever's remaining into the pool into stablecoin. I could set this setting here. So when this price of Ethereum reaches 6,000, vFat would withdraw my liquidity and sell everything into USDC. And you could switch like the upper trigger and the lower trigger off as well. If you're using this pool to dollar cost average into Ethereum, for example, then I could set this exit range to be at, let's say, 1,500, where I'm fine with converting whatever USDC I have left into Ethereum. So this tool could be great as well if you're setting an automated exit. Or if you guys are setting like a stop loss, you could do this as well. Let's say you're yield farming Ethereum, but you don't believe that it's going to break 2,300, right? And you want to cut your losses if Ethereum drops below that. So then you could set like 2,300 and then exit to USDC. If your goal is trying to make a USDC profit on the way up, similar to how you would set a stop loss for a trade. And you can see the transactions that are happening here. For example, I'm swapping my Ethereum for some USDC in this case, very little of it, right? I'm depositing 0.0005 Ethereum and I'm swapping only 0.00084 into USDC. So less than 20% of my capital because I have a bullish range, right? And then it's going to deposit the liquidity for me. And there's a very low protocol fee of 0.09% when there's a swap that takes place. So that's something to keep in mind. There's some fees associated with it. And let's take a look at that right now. So in their docs, you could see here, if you're depositing the NFT directly manually, like for example, I have this Hyperliquid pool. If I were to deposit manually, because I make all my swaps manually, right? That's what you want to do if you have a lot of capital, so you could save on the fees. If you're depositing both underlying tokens, like for the example of Ethereum to USDC, if I deposit those two tokens separately, then it would be free, right? But if I deposit only Ethereum, for example, and vFat automatically swaps it for me, then there's a small 0.09% fee. If I withdraw my NFT or my liquidity, then it's 0% fee. But again, if there's a swap that takes place, there's a 0.09% fee. And I believe this fee applies on your total capital. So if you have like $100,000, for example, multiply that by 0.00009, you would pay $90 for vFat to basically like automate this whole process for you. So it's not too bad at all. When you use these other features like harvesting, compounding, rebalancing, these are the fees that they would take. So harvesting and compounding manually, the fees is not that high at all, less than 1% of your reward. Auto harvest, a little bit higher, 1.2%. Auto compound, 1.8%. Still not bad at all. But what would really kill you is this rebalancing here, especially if you're doing it very often, because it takes a cut of your whole position, not your rewards, right? 0.05% for the higher fee tier pools. That's above like 0.3%, for example, the 1% fee tier pools. Then you would pay like 0.05% of your position every time you rebalance. But if you guys are like me, where I don't rebalance very often at all, if I do rebalance at all, then this is not a big deal, right? And auto rebalance, again, is the same as manual. If you guys are doing something like this, like what Beefy is doing, then you might as well just deposit into Beefy and let them do it for you. But again, we were looking at the price, right? It doesn't make sense to invest into this pool if this pool is basically declining in value over time. You guys are better just like holding stable coins and like lending it out, right? Rather than just letting this bleed out over time. So I hope that makes sense. And if I want to deposit right now, I could hit deposit. And lastly, you could buy insurance for your position as well. If my position is bigger, then it might be worth it to buy some insurance if I'm worried about the protocol hacks. Let's say if I were to deposit 10 Ethereum, then my insurance is roughly 115 USDC. You can consider that as an option, or you could use other insurance providers as well, since this is quite expensive. But let's change this back to the amount of deposit at 0.005. And if I'm happy with my choice, for example, I want automated reward with auto harvesting, and then my max price to be roughly 10,000. If I'm happy with that, I would hit deposit. I have Pocket Universe extension for a added layer of protection. I hit continue and then I hit confirm. So this is actually deploying a fresh contract that is used to basically manage your position on Arbitrum. So I haven't deposited any funds yet. Once that's done, I'm going to be able to swap into my position here with only Ethereum, pay a little bit of fee, hit confirm, and then I could enable automation here and hit confirm. And if I go to this deposit tab, I see my position right here. And you can see your daily reward, your yearly reward, your monthly reward, depending on the APR. This is not that accurate, but you could still take a look anyway. And here you could manage your position, right? You could harvest, you could compound, you could exit to Ethereum, or you could withdraw your position manually here, all into Ethereum, or the NFT itself. You could take that out as well. If you want to use other management platforms like Revert Finance, you could do that, or auto swap into other tokens. So this is actually really nice, and you could rebalance here as well. But keep in mind, again, what I said about rebalancing and locking in your impermanent loss. And you can change your compounding and harvesting settings as well, right? If you don't want it to auto harvest, then you could turn this off as well. So that's pretty much it. I hope that makes sense. It's definitely a good tool to use if you guys are managing a ton of different positions or running like a smaller cap altcoin strategy, for example, where you want to be more well diversified. Then you could set up vFat to basically automate your process. You can look at their docs as well. Make sure you read through like their audits if you're worried about the contract safety, because we're interacting with more smart contract. There is some smart contract risk here. So I wouldn't put like 100% of my yield farming capital here either if I want to automate my process. And make sure if you guys are yield farming with a lot of capital, then you should use a separate hardware wallet that interacts directly with vFat. That's separate from like your cold storage wallet. So then in case your computer gets hacked, these positions are not touched, right? If you guys are using a hot wallet, then if your private key gets compromised, your computer got hacked, then these funds would be hacked as well. So I hope that video helped. And if you guys want to learn more about yield farming, be sure to check these other videos out. I try my best to help you guys become a more consistently profitable yield farmer. You could also switch on the notification bell if you want to be notified when I publish new videos. Thank you once again for watching. I'll catch you guys next time.